Hey, good morning, everybody. Outside markets are a little more lively this morning than they were to end last week. Crude's up about $6, $7 a barrel, depending on what month you're looking at. Due to failed peace talks with Iran, the U.S., in Pakistan. Don't know if that's completely over or not yet. I saw there was a list that Vice President J.D. Vance gave them as far as the things that we have to have before he was going to leave. I don't know if he's left or not. I haven't really seen that info, but it did shoot oil up overnight. Soybeans, corn initially followed, wheat has followed that, but they've kind of settled back here now after kind of digesting some of that information. So we'll just dive right into it here. Looking at December corn, last Friday came in, poked out that low that we've been talking about at 469 and a half, got down to 469 and a quarter, so just barely poked it out. Then came back, found some buying, closed kind of mid-range. Obviously popped up. I think we even gapped up a little bit overnight initially. We have since filled that gap. We're back down below the 5-day. We're currently up 3 and a quarter and at 475 and a half on the session, but the 5-day sitting at 475 and 7/8, so just below that. The resistance will be the overnight high initially of 476 and a half. I could easily see a bounce up into this range in the 20-day moving average there, the blue line around 480 and 3/8. I still don't think that we're going to be able to muster much more than that right now. I'm sure I could draw some kind of a trend line down around in here. That may hold this thing in for the time being. Just seems like a lot of outside forces. Good planting weather ahead. It seems like obviously still very early, and it takes a long time to have any type of planting delays or anything like that. It just doesn't seem to happen anymore these days. So I don't expect anything like that. I think we're gonna have to get down the road here after we get the crop in the ground, or at least the majority of the crop in the ground. And then start to see some weather concerns from that point that will drive us up into some type of a normal seasonal weather pattern, which we haven't had for quite a while, right? I mean, this is at least year 2 in a row, 3 in a row. You had early highs last year, super early highs last year and the year before. So, expecting a little bit more normal seasonal type pattern, especially since so far this has held up pretty well. We had our high in March. We don't typically see highs in March. Could it be the high? Sure, it could. I just think that overall, because of our demand structure and because of the way this is acted, that we should get a pretty significant rally this summer. It's pretty important that we grow a good crop, and I don't think we have a great handle on acres. We've gotten some numbers on that, but again, those are very early numbers with very poor information because of the relationship with the farmer and the USDA. So I think even the trade knows it's hard to trust that stuff. A little separation here, looking for lingering near-term upside momentum. Just like I said, we could easily go up for a couple days into this area here. Soybeans have broken above the trend line, have come way off their highs, but still up 1 3/4 at 11.59 and a half. Again, this swing high here at 11.64, we got just above it last night, so 11.64 and a quarter, and found selling there instead of buying. So could be a double top here. You will know better if you come down and close below this trend line or below the 5-day especially. So resistance will be the overnight high of 11.64 and a quarter. If you can get above that, I would guess you'd see some buying pretty quickly, and you may push us back up to that high pretty quickly. The overnight low of 11.56 and a quarter, but then especially the 5-day at 11.56, you get a close below that, I would say it's a double top and we are heading back down. Again, like I've said, this swing low is where you'd ultimately know, but that's just a long time to wait. I mean, that's 11.35. You could also say maybe here 11.49 and 3/4, but I would say you close below the 5 or 10-day, the 10-day at 11.53 and 7/8, and that to me would be enough of a sign that I would say that's probably it. Doesn't mean you need to do anything there. I still think that we're going to get significant opportunities here this summer. I just think we're at the time frame where we would normally break, and I think that's what we're going to do. So I still, this is certainly a better market and a stronger market than corn. and fundamental wise as well. I mean, we just aren't expecting to plant as many acres. We don't have the carry out. The one big negative, like it has been for several years, is South America's crop. But if China decides they need to buy from us, which they certainly have done some of to get what they want from us, then it may not matter what size South America's crop is. So I think this is a really interesting market going into summertime. And even if we don't know those answers yet by then, the market's still going to have to play that stuff in like it's possible. So any weather is going to be a problem for beans. Any weather will be a problem for corn too, because we're expected to use a lot. And even with a larger acre number and a decent yield, we're going to use the majority of our crop this year. So anyway, we'll take a look at these numbers. You know, again, anything above 11.64 and a quarter on soybeans, I would say is going to get bought today, but we do have to worry about a double top as we poked that thing out last night and did not get follow through. All right, we'll watch the action. Everybody have a great day. Thanks. Bye.